start sharing. There you go. So, yeah, no, don't know if you already found it, but otherwise I just show it right here because I have it open, the 7-day short, from this engulfment. Basically, you have this one here going from there to there. But if you would have like taken it right away, then you already went through like $20 more of pain. So that's where knowing which FIBs really when to take makes sense. But I guess not many people are watching these time frames anyways. And for scalping, it's probably something more of interest what we have had just on Hype, for example. It's also like shared in the chat to go over some FIB trade basics here, because there were like many questions about it and they keep repeating. How do these entries and exits work, and how do I find them, and how do I take them, etc. And so we had a very pregnant and good example on Hype just now. So we have this chart in front of us. If we take a almost clean one, then price goes up here, creates this beautiful backside to this dumping here, being now the front side. And then if you look on where price already visited, which entries and already fulfilled the exits, and you will probably see that anything created here got eventually already activated here, so you don't have to look here much. And then this same. So these things all played out, which makes it easier also for price to follow fall then lower, because all those supports here have kind of already played out, despite, for example, this one. So even if it's a tiny scalp, you would already find a candle engulfment here. So to have a FIB trade, you want one candle gets engulfed by a full body of the following candle, but in opposite direction. So you have a selling candle or distribution candle here, followed by an accumulation candle, which is larger than the prior one. And this creates a trade where you put a FIB on the engulfed candle always. So this is a long. This will create a long. So you put on this wick low on this body top the FIB, and your entry will technically be this level. So the one level it is called, and your exit will be the 1.618. And then you just wait. I mean, if the chart would be like here, let's go back a bit, then this doesn't help you at that moment, right? But charts do its thing, and maybe they crash, maybe they keep going, but when they crash, you can check on the backside, which is this, where those trades are and were not activated or completed yet. And this one isn't complete because the price never, sorry, never went to the entry and then to the exit, because it simply after disclosure kept going higher and did other things. But eventually when price gets there, oops, go one time back. So now price is falling again. You still have this trade waiting for you, pending. And eventually, when you see the price is going nearby and you want to take like really good trades, which have a very high success rate of completing also immediately, Obviously, there are many more options to trade things, scalp things, but just going through this basic principle thing, you would look out on when price does something like this, tops out, comes back to test this whole range, scan through the various time frames. In this case, it's only the 4 hour, but you will probably find something on the 6 hour, on the 8 hour, 2 hour, 12 hour, depends. But in this case, for the 4 hour, this entry was never hit. And as price travels here, you can put a limit order there with a direct profit taking, if you want to keep it simple, of to entry here and exit here, and then see what price did in between. Or now it did it already, obviously, because multiple candles went through, but to understand it a bit better, it's probably smarter to go to the 5 minute and then see what happens there, because that's also how I do it if I sometimes want to see if a trade already played out. And yeah, as you can see, sometimes price doesn't go immediately to the exit. So there are multiple ways to play this. Maybe there was a better reason to take this more greedy entry. Can also go through that later. How to find those, probably. But eventually it all went to the exit anyways. So if you were not like degenerating long and had your limit order here, okay, then fell a bit more further through it. But eventually it turned back up, and then your exit is hit, and then this trade is complete. And then that fib trade and hold level is not relevant anymore for those basic principles. There are, again, like exceptions and nuances, but going with the basics here again, for an understanding, this would have been your entry, this is your exit, and then the trade is said and done, and then you can move on and find other things in parallel. And for the most recent dump range, we had something similar. So that was the 4 hour again, also on hype. So going all the way down here, same situation. You have a distribution candle engulfed its full body by an accumulation candle, and the price never went to that entry until now, or until today. But the idea remains the same. You draw the fib from the wick low to the opposing body top. And it also makes it probably easier then to already see that price never went there. It really only matters if the wick goes through or closure doesn't matter. The price has to somehow revisit that level. And as you can see, those wicks barely stopped above it. So then it went much higher. And now, today was the day that price was revisited and beautifully bounced off of there for multiple reasons, because there was also like a weekly support level, which makes it extra strong to trade those things. It's like very lucky to have a higher time frame like the weekly exactly on the same price like this entry, which makes it also high probability trade. I actually took that long, took a partial TP a bit earlier, just to de-risk, and so I can put the SL below the wick and then let the rest run, and then it TPs the rest of it at the exit, and that's basically your free money. So if we zoom in on the 5 minute again, we can see how precise this one actually also then played out. You have those also a lot, not always that beautiful, like nailing it to a few pennies and then immediately reverting and then go straight to exit. But you have those. You have them plenty of times, not every time. Sometimes you have to wait longer, like seen on the example before. Obviously, price can run higher. There's or lower. It's just the obligation of trading this specific entry and exit based on those rules. Again, keep it simple. Then this is what you can find on all assets, all charts, basically everywhere. If we zoom in on the 6 hour, for example, there's right at the same place a 6 hour long, which didn't hit the entry yet. So if I switch to the 6 hour time frame, because they are all relevant, maybe you want to focus more on the daily or 12 hour and 4 hour and not go through everything. That's also perfectly fine, but there are plenty of trades that are like that. So there's another long because we have a full body distribution candle here and then a full body engulfment of the next candle. And this creates another trade, which starts again, taking the fib tool, hitting the wick low, hit the opposite body side. So this is again your entry. This will be your exit. So if we go to the 5-minute chart again, then we can see the entry wasn't hit yet. And the exit is also much lower. And in general, I expect lower prices on most assets. So this could very well be like your next rollover. Not saying this will happen right now. It can very well go a bit higher, but it's also totally valid if it goes lower again here. Now that multiple indicators are cooling off with a little upside, then does whatever, bounce around maybe a bit, and then goes to the exit soon enough. But that's like the next long. And now that this already completed on the 4 hour, like shown before, now you got the margin again, or position size open again to wait for this one. And yeah, then basically long from the entry of 42.12 cent and exit at just about $43. And why this particular one was very strong, I can show that quickly, because from all the rules there is, we also have on this weekly low from before, it creates a range of 2 candles. So this will create a so-called break level. And if we then go back into that 4 hour long from before and put the fib on there, then you can already see how like the lines are overlapping so hard that the tool can't even differentiate. So there was like huge support to make this a high probability trade, despite the fact that those longs are, even without the weekly break, already solid, especially when so oversold. Makes it even more likely that you get bounces everywhere. Like here, it falls here into the support area, gets a bounce before then going lower. And that's the same we, in my opinion, also have at play right now. But you can take those scalps in between, you know. It's not, doesn't mean you have to hit this long and carry it to $70. It's why not take the high probability trades, like free money laying around while the chart maybe builds some more structure that gives ideas about an actual bottom, like something like here where support is actually built before then traveling back up. I guess many people try to catch the knife and are like, yeah, okay, it has already fallen so much, I need to long anything, and then they long here or long a bit later because it already went up and then it rolls over. And this is also basically the same moment we are in right now. It's super oversold, it gets it bounces where it should, completes those obligations of all the other algos are also entering here, exiting here. That's why you did see an initial like strong sell-off. You know, can actually track it. Here's the entry. A lot of buying goes on, and then right at the exit, you get a decent dump. Not like super crazy, but yeah, it's also not like that it doesn't exist, you know. So it goes to the exit and then immediately sells off because a lot of profit taking goes hand in hand with those trades. And yeah, if it rolls over and goes to the 6-hour entry here, like shown before, then that's a totally valid next long as soon as it does it. Can very well go a bit higher. And I know some people are taking those minimal obligations from the 4-hour as shown before. Take the entry and then take only a partial exit, or on the way, on the half the way, take 33% out, and on the actual exit, take another 33% out, and then let the rest run, because yeah, could have also just went much higher from here and then put the stop loss at the entry. You already made like 66% of your position in money and profit. And the other 33% is like, let's call it moonback or whatever, because if it wants to really revert for a little longer, swings around a bit, maybe takes some stop losses from shorts out here before it's actually rolling over. Then then you have a tiny position still open to try your luck on a bit more profits after this 4-hour obligation did already complete. So, but when price goes here, then that's definitely personally my next long. And entry is here, exit is here, and then see what happens. So
in the case of the 6-hour, are you going to layer in as it starts to be an increasing likelihood that price will go through the level 1 a bit further? Or will you just take it at the level 1?
So personally, I usually take, if I scalp these candles, then I position size accordingly that I just enter and exit it and let it run usually. But if I want to be like, yeah, okay, we are going into a low here and I want to min-max my entry and position sizing, then I really look into other things also, like RSI, divergence, how far oversold are we? If I want to position myself for a bigger swing and then only take 50% out of the position at the obligation, then that's also fine. So it depends a bit. When I'm just scalping this, then I take a much smaller position, hit the entry, hit the exit, set and forget, and then let the chart just do its thing, and then I don't care, because it will happen anyways. So if it then goes like this, lower, does whatever, and then eventually goes to exit, then I couldn't care. It's profit in the end of the day. But if I'm looking for like a more sizable entry position, then I would actually zoom into this candle. So now this is like the 6-hour scale. Then I would dial down probably from the 1 hour and check if I have other indications of reversals and other hold levels that were not consumed yet. Because if I leave the fib here, I can see the start of that fib trade. So behind that vertical line is a relevant area. So that's again here. And I could actually already find like a 1 hour hold also here, because price created this distribution candle and this accumulation candle after. And this is also like it's a valid trade on its own. So it also has like support, you know, there will be buyers for this very tiny bounce. But on itself, it can use also this hold level to actually take a bigger bounce, you know, because if this is at 6 hour, where the entry is here, would first fall through more and not go back to the exit, then you get also increased buying pressure. And if it hits the next support hold, then it makes it also more likely that it eventually will go to that exit. And this would be like a so-called like greedy entry, because it's like, how much is it? Yeah, $1 lower, just about 90 cents than the actual entry. And if I would, let's say, look for a $5,000 position, and I don't want to be left behind for this trade, because it can perfectly go to the entry and then to the exit, maybe I will put 2.5 here and then put 2.5 here, and then let the chart do its thing. If it goes to the exit first, then I would remove this limit order, and if it goes lower first, hits both entries at the raw FIB entry and then on this refined entry, yeah, then the average is obviously somewhere here, somewhere in the middle, and yeah, and then eventually price will go there. I mean, can also fall lower a bit because it is what it is, but it's not like you would like degen oversized or degen leverage doing this. You always want to give yourself room to let the price in the chart do its thing. So you don't have to panic every time price goes a bit beyond your entry. But yeah, that's basically how you could find a refined entry. I want to check the 2-hour also, because you also find a lot of 2-hour refined entries. No, so in this case, it's on itself. Oops. It's on itself a FIB trade, this 2-hour. So you could stack those, because these are trades each on their own. And it can very well take that 2-hour and 6-hour entry first before visiting either or exit. And that's where you also need to be careful, like if you have like a lot of things at the same place, and put just limit orders and limit order entries and limit order exits on all of these blindly, and then it goes through like 5 entries first before it goes to those 5 exits, and you want to use some math also to not oversize or over leverage in that way, because that can very well happen. It's just like putting more pressure on the price of reverting or reversing eventually, but doesn't mean it will immediately do that all the time, like on this very beautiful textbook long. It was 100% also due to the weekly support here, which has much higher probability of reversing much quicker first, before then it will decide just now if it makes something bigger out of it, or if it's just like the minimal bounce, reset some indicators to cool down, and then rolls over and goes lower again. So certainly not as easy for instant entry and instant exit like this every time, but often enough. So yeah, that's where context is important, and most likely position sizing is most important. If you have like usually trading $10,000 positions and you're learning all this scalping, then maybe start with $1,000 or $500 until you figure it out a bit more, and feel confident of when to take those, and when to take those not, because let's find a good counterexample of which FIBs not to take. Yeah, maybe this daily. Let's check if this completed. No, it did not. So this is a good example. Technically, you have a long here, because this daily candle got engulfed by this daily candle. And yeah, again, draw the fib from the wick low to the body high. And obviously price already went to the entry, but did not went to the exit yet. So if go and zoom into the 1 hour, the trade was created after this one. So by the way, also for the basics, because that makes it also a lot easier to track if price actually did hit the entry and then afterwards the exit. Only that order is relevant, and it's not like, yeah, price already went to the exit. Is the trade still legit or not? Yeah, it is, because it has always the obligation to hit the entry first and then the exit. No exceptions. The only exception is to know or to understand better which trades you want to take and which you don't want to take, and to see if price did actually hit the entry and then the exit is where I usually use the arrow keys on the keyboard, as simple as it sounds. I draw the fib, then use the right arrow twice to move it, because this moment in time is the first time the trade can start, because those two candles created that trade first. You need closures. It doesn't work when the candle is moving and then you're like, okay, does it create the fib or not? There are many times where the candle hangs around into the top and you think, yes, that trade will be created, and then right before the closure it just goes boop back below, and then you don't have that trade. Like, here's a good example. I mean, it went higher anyways, but for this technical idea of how these trades are created, this is not a fib trade, because you have no engulfment of this candle from this candle. So anyways, if you find one and you put it on it, then you can just use the arrow key on the keyboard, put it to the right twice, and only here and after can the trade actually be activated, and until price doesn't revisit this entry, it's still pending. And then you can zoom in sorry, on the 1 hour again, and then see, okay, it hit the entry, but it didn't hit the exit. So that's also where, if you're a bit more advanced, comes like fine-tuning at play, where take half of TP on half of the way, then let the rest run, or how do you do about your trade? That's why context is important, because if you look at the chart for how it is right here, you can already see that that if it hits the entry, it will also run into certain level of resistances here. And that's probably where, when you understand those basics a bit better and then actually do it, execute it, watch the charts, observe how price moves, then you will also probably see that when the price goes back up here, you also have technically a 1 hour short here. So this is a short and is a resistance level. So this is by definition and by design already like a good moment to take a partial TP and then try for the rest of the position to let it run. Because as I said, the price has no obligation of completing a trade immediately. It has just very high probability in other contexts of doing this more quicker, which this 4 hour example was very good because it had a weekly support here. Chances are very high it completes like immediately. You have the profit, the collateral or margin is free again, and then you can move on and do something else. But for this trade, you probably wouldn't have wanted to take it, because the downtrend was most likely in the way of the exit. So if I would try to draw this out on the 4 hour, So this goes here. This doesn't touch this. This goes here. Yeah, okay. It created a downtrend also at the same moment. It didn't go there, so it was a bit more tricky, but just by the looks of the overall resistance range here, there was like a better chance that it will not immediately complete and just be stuck under this whole, okay, we are correcting phase and we want to go down, and all the bounces in between are just short-lived to reset short time frame indicators. But yeah, a bit more tricky. As soon as that 4-hour candle closed, then that downtrend draws out perfectly. But before it is closed, let's fairly rewind to not only play hindsight. It's like it did hit the entry here, obviously. This were your downtrends at play at the moment. So you could already see that you're actually also not taking the best trade, even if you go even a bit further back. I guess that's a good situation to justify it or to explain it a bit better for multiple reasons why it didn't work. So this is the moment the price entered that entry or that trade, that pending trade, and your exit kind of sits behind this downtrend here on this outer downtrend. And that's like not a good setup because you already understand that you are in a downtrend here. And you usually don't want to have exits far behind downtrends. I mean, there can be wicks like this, and then it would have hit it, but probabilities were more likely of not doing this, given the fact that you have this resistance here again, and you hit that entry. And more safer play is to actually then at least partial TP at the more likely resistances nearby, because you also lose like not a lot, and the trade is still valid, and eventually price will go there. I mean, the bull run is not over. Obviously, things will go back up, but it's good to keep those in mind. If you have like a lot of trades incomplete, where you are hitting a lot of longs, that creates a lot of buying pressure, and that buying pressure will convert that sell pressure back into upside. So until those exits are reached. So this was not a good probability trade because that exit here would have needed to whatever do here, then actually face that downtrend, also face that resistance again, and then your exit is here. So you're already like going through two areas of probability not being in your favor of going right through the exit. And yeah, I mean, we already know that also didn't happen then. To be fair, that candle created then another downtrend. And I guess this would be the latest moment of exiting that trade, because this full body is on top of that trend line. So that creates the next downtrend from the top. And now you are like super screwed because now you have that resistance and that extra resistance from that new downtrend. Yeah, so calling it quits after this closure and then seeing price struggles into that trend again would not really, yeah, you would not really want to hold on to that. So that's why I say it's, yeah, knowing your trends and trend lines makes those trades more complex at times. But like from the basic principle standpoint, you would have also gotten like any exit here. It's not like price immediately went to the entry. Oops. to the entry and then just went to Nirvana from there. It gave you definitely options to at least offer exits after it came back up a bit. And if you then don't feel comfortable anymore when price starts struggling here, then there's no shame in like taking tiny profits and put in stop loss at entry and then see what happens. So yeah, but again, going to the most recent example, the probability of this area here is much higher because that's also like the floor of the range. It's a prior overall low. That's your total swing high. That's your swing low. These are your swing highs again. And now we are trying to find swing lows. And those pending fib trades at swing lows and swing highs have like super strong probabilities. And to find
Blue,
them,
this is
you
hey, Cohen,
basically
can you hear
just
me real
go
quick?
through
With
the candles that
these
haven't found their entries yet, or the then Goldmans that haven't found their entries yet. And then then you trade them basically.
Blue, can you hear me okay?
Now I can hear you, yeah.
Can hear you.
Yeah, so it's 8 Cohen. So real quick, on these downtrend lines, we've got that that bearish candle, the yellow on the 5th, that we've drawn our 4 trend lines from. Really quick, if you wouldn't mind touching on the very first two, there's 3 bearish candles, and then we put that at the wick on the top. But then you put another trend line down on the very next candle as well. And I'm just kind of unfamiliar with those 2 candles being so close considered in the trend. If you can just speak about that in any way, that'd be helpful.
Yeah, sure. So if you initiate a downtrend from any top range, like you have 2 candles, then it starts a downtrend, and you have 2 candles again, then you eventually want to find an accumulation candle. And if we rewind back there, so at this moment you don't know that the top is forming. Obviously, we're also talking hindsight, but while it's happening, you don't know. I mean, price could do whatever. So, while more candles print, oops, the tool goes a bit too fast. Let's go manually here. So now you have your first chance of reversal. Now you're building a trend, because from this top candle, this wick, and this upper wick, you can draw a trend line, and now you have a trend. Price could fall lower to be stuck under that trend, or price can go higher and try to travel outside. And the rules for subsequent trends is you need a complete body outside of the existing trends drawn. So you have this trend you're starting with. Oops, let's take the magnet tool. This is your anchor, and this is your anchor. And then if you can I go one candle forward? Jump to the real-time chart. Okay, yeah, that's good enough. So now with the rules of you need a full body outside of this trend in accumulation to draw the next trend, then this is your next candle. And sometimes I even zoom in really hard when it looks super close. And in this case, it's not close, but just for the sake of the example, the whole body of this candle sits on top of this downtrend. So that's how you get your next downtrend coming from that top. And that's, if you draw a whole downtrend out, that's then called cycling, as far as I'm aware about the vocabulary that Sin basically deployed. So then again, you wait to let more candles print. this candle here, if we zoom in, sits in any case at the trend. So this candle, if it closes in accumulation or in buying, would not make you draw another downtrend or move the trend. Because you need a full body like this one outside of this trend on top of it to have like a next valid downtrend candidate to anchor on. So if we go move on, now you see, oops, moved a bit too far,
And is
but
this
whatever.
the same for this is the same for the inverse as well?
Sorry?
Would this be the same if you were drawing trends that were moving upward from bullish on the bottom of bearish candles?
Yeah, exactly. If you're this is a downtrend, and if you would draw a uptrend, then you do the same, just with distribution candles, and they are lower wicks.
Okay,
So
and then just one final thing here. I don't mean to take over the live stream at all, but
yeah, no
the
worries.
power
Keep shooting.
kind of I guess like this scaling of power moving through these trends that one's somewhat broken. There's a full accumulation candle outside of that first trend drawn. Do they lose any like order of magnitude, or do they increase as they move along? We're kind of moving shorter and further to the right as trends develop. But any thoughts you have on that's helpful as well.
You mean as if like these trend lines eventually are weaker or stronger over time?
Yeah, over time and as those new trends come, do they lose any power from their proximity just locally, kind of as they move further away from those trends?
Well, that's a very good question because I obviously have my main chart of hype. So let's find out what I've drawn out and then see what price did traveling within those downtrends, because I have like the main downtrend, obviously from the whole top. And maybe this gives yourself an answer to what you asked. And if you ask me, if I remove that fib quickly to make it not so congested on the chart, if you ask me, you can see how you get decent reactions on those persisting trends, which is another reason for myself why I actually don't remove them until they become like out of range irrelevant. Because you can see this trend line here was like even helpful down here to give you a bounce. And why is that? Because you obviously don't only have like trend lines only, you also have the break levels and the hold levels, which is here again. So there was like a extremely decent chance to make a bounce here because you had a trend, you had a break level, and you had a hold level going into here. And if I zoom in, I will probably find lower time frames also. So you can Skype that, not only for the fib, you can Skype that from trend to trend, or if it like this pushes really hard through, bounces then again on that older trend line. Look how precise and beautiful this is, use it as support then and bounced another time until it found like resistance here on this bigger resistance.
Yeah, that's great.
So
Very, very helpful.
obviously it's not like absolute surgical, reliable, go from A to B to Z to B to Z again. As you can see, it fell off prior to that. And I guess you maybe heard it multiple times on Sin's videos, subtly, but this is like a good indication of how strongly the pushback up is already weakening, if that makes sense, or if how much the pushback up is already weakening, because it cannot manage to even hit that trend again. It falls off prior to that, then fucks around that resistance. It basically took the first resistance it found to reject, it cannot even push into the trend again, which is a signal on itself to stay aware that prior trade we talked about here is probably not visiting its exits up here. So yeah, but I want to add that
Very
I'm
helpful.
still, yeah. appreciate the question. Very
Yeah.
important to talk about these things. But to be fair, I'm still like learning and digging into trends myself, because that's like the most complex thing you can have. You have price and you have time, and trends are combining the two of both, and this is very difficult to take the right ones, to take those that are the meaning of what will happen on the chart with a high probability next, because I obviously can draw trends anywhere. I can draw this here, and then yeah, okay, bounce here once, but other than that, not a whole lot happens. So how meaningful is this one really? So that's where all the exercising and then where more of the work comes for myself while I'm digging through those things to find a meaning in which things are at play really. Because as you can see, we have a weekly downtrend here. And yeah, a 4-hour chart cannot really push through a weekly downtrend. We had that weekly here, and price tried to do it while it's in that overarching downtrend, even on the 4-hour drawn out. So we had like super huge resistances here at the same place, but what am I going to do? Will I add also like the 12-hour downtrend, the daily downtrend, the 3-day downtrend? Eventually, everything is full of shit, and then I cannot make any decision to take a trade. So that's why I'm trying to say it's a lot
I
of
couldn't
work.
agree more.
Yeah.
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 At what point do you pull off the gas and say, like, this is going to govern, and you get into the minutia of trends? Anyway, thank you so much, because the trend discernment and the skill set to sharpen that axe is really valuable to me. So I appreciate all the time you spend going over that. Thank you.
Yeah, you're welcome. And keep shooting if you have more questions. No worries. It's, maybe I will understand
That was a
things
great
better
question.
while I
Thanks,
try
man.
to explain. Yeah, it was a good one. What did you actually ask something on top while saying thanks? I'm not sure. I feel like you also asked
Yeah, I
a
did. So
following
I
thing.
think one of the things that at least I know I struggle with a lot is we're looking at the 4 hour within the weekly on these 7 sort of downtrends that we have all mixed out, and then we talked about the subtle fuckery that Sin kind of alluded to, which the strength of that knocking on a trend. If we don't even touch that trend at all, we're not likely. Likelihood diminishes significantly if we can't break a first break level and get back up even to touch that downtrend. And so where I'm looking to improve is not only which trend lines offer greater likelihood to be obeyed, and under which conditions do, as you put it, the 3 hour, the 12 hour, the 4 hour, do they fuck off? And we can clean the chart up. I suffer from shiny object syndrome, of course.
Yeah.
So getting as much shit off my charts as I can, I think, is a huge help. And so any sort of discernment of, like, if then what's, these are more likely than these to continue and establish confluence amongst the trends. If you have, or anyone at any point down the road, if you do another live, for just a little bit of discernment on that, like as you're charting, where does your brain go when you go, okay, I've looked at these, fuck off on the rest of all of these because I know they're shit. Please
Yeah.
and thank you.
Yeah. Good question. Definitely. And as soon I have like the ultimum receipt or blueprint for all of them, I let you know. So probably never, but I can only repeat to
Sure.
everyone what I said like yesterday, today to one of our moderators, or GS, because he also asked basically the same, what to keep, what to delete, and it's not that trivial, but the best or closest answer to the truth is also like the obvious one, which is if you find trends that price has a good track record of putting reactions onto, then that's also like the measurement of how I keep them. I mean, I don't have like a lot of charting on hype going on, but if I go to the same example I was explaining to him on my SOL chart on the daily, then you will see this sneaky trend line here. I mark it blue for the moment. Like helping the whole uptrend here before I lifted off a bit. Moved it over to here through all the cycling. There were more trend lines that I deleted because they became irrelevant to price action. But this here kept staying relevant, actually, because when you zoom in the 50-minute, then you can see all the magic it has done. And there are and then you can probably already understand that in the future there will be another reactionary context like you got here.
So they're intuitively sticky for the most part.
Yeah. So can I tell you that by a blueprint how long I will take this trend line for granted and then on my chart? No, I cannot. It will probably obsolete itself like kind of this one. I already thought that today when I've seen this price action here, because yesterday I still found this one to be reactionary enough that I thought, yeah, okay, maybe this is valid. It will probably go lower, but you get your initial bounces and you can scalp those if you look to the left and find support on break levels here or other undone hold levels. That's good for Confluence to that it had that reactions. Then also it served as resistance, but also already like much weaker, you know. And already like, oh, okay, I can claim it a bit, or no, lose again, fight above. So it fucked around it a lot before it then bounced into that actual much stronger thing. But this today made me already feel while I was scanning through my charts what I want to draw out, that this is like today and now this one is obsolete, so I will actually just delete it also now on the fly because it pretty much did nothing here. And so how can it really be meaningful in the future if things are at play that are greater, that makes the whole line completely irrelevant? And I don't want to make myself in the future cause some decision-making fatigue, because if I didn't delete it and have it, and yeah, sure, maybe it gets a reaction here again once, but obviously that trend line is already weak for the reasons that you don't have like a very good signaling. Basically also since here, you can interpret it like very good reactions around this, but also kind of not really anymore. And at this stage, to me, it's already like kind of obsolete. And so I will just go and actually delete it after all. So even finding those and keeping those, or understanding or making a decision of which one to keep, is to me a part of the craftsmanship, honestly. If you would be like strict, then you would also probably delete this one because it got broken, it got reclaimed, it got hard closed, and so on and so on. But nonetheless, price keeps putting reactions on this one, so would be also kind of illogical to just remove it, you know. Somehow algos and traders agree on this trend to have relevance as price moves throughout time, and that's what trends are basically. So horizontals are raw price agreement or disagreement, but trends are price level agreements plus or including time component. And for some reason, time within their trend is still agreeable or disagreeable for support or resistance. And so, yeah, that's why I keep it at that given moment in time. And same as like break levels, that's like the second subsequent most question I get or I see in the chat, not I get them alone, but like asked in chat in general. It's like, when are break levels really are like done? Technically, this break level here got, it got hard closed with this one, but then it didn't do anything because price never went there. So how could it prove itself? Then the moment it got there, you got some measly bounce here, and then actually it fell through, hard closed again, fell much lower. So is it really relevant? Technically, it kind of got obsoleted, but also technically, if you look at what price is doing the last days, it's not really irrelevant. So I guess that's the better answer remains for trends and or nuances, which things you want to household, and yeah, which things you want to hold on your chart, and which one you want to clean up, let's say, goes a bit much more into the exercising and experience while you are charting, rather than giving a blueprint rule of thumb that accounts for everything, because that would be not like a fair take. I can remove it because it got claimed, it got broken, but it's, to me, this is not good charting, because I know old levels are usually extremely strong. So that's the reason why I still maintain things from 2021, 2022. Old things on the chart are very strong. And you also already know the public enemy of Sindot, which is the Trump trend. Technically, it's super old. Also, technically, it got lost. I don't know, where is it? I don't even have it on my chart, I guess, because he reports about it enough. I don't need it on my chart also. So where was this little bugger? I guess, was it this here? This? Yeah, that's a Trump trend, so-called. Technically, this trend also is dead, by the technicals. It's got hard closed so many times. It was used as bounces. Eventually, it got broken with hard closures here. But why would you delete it? Because price obviously has like a huge magnet on it to gravitate there, but also then reject there and not liking it. So what are you gonna do? Will you delete it? Because by the rule of thumb, you would delete it with this hard closure here? Or will you maintain it because it actually gives you good information of when the price goes there, that you really want to know what happens around that moment in time? So I hope that makes a bit more sense to you. And I'm sorry that I don't have a better answer of giving you one rule for everything.
Very helpful. No, I get it completely. No worries, and I appreciate all the help.
Okay, cool. Glad to hear. So, yeah, another good.
On a question,
Yeah,
if you wouldn't mind,
keep
I'm
shooting.
struggling with it. I'm seeing you moving through many charts, and I'm seeing you have the quote unquote main chart.
Mm-hmm.
As you're moving through charts, the stickiness of how things retain on your main chart but don't muck up your other charts. If that's a quick 30-second thing, maybe you touch on it. If not, no big deal. We'll get it somewhere else.
I guess you answered it already yourself. If I draw everything out here, then I will make no decisions at all. So I have many charts for a big picture where price is in, and then I actually have like charts for potential scalping situations and ranging stuff. So I have my flex section here, which is like flexible.
These are different apps, not the same ticker through TradingView.
Sorry, can you say that again?
Are these different assets in TradingView, or
No,
are
no.
they like
Different
USDT
tickers.
per
It's like
different?
Bitcoin, Solana, different tickers, but always the same asset. And the
Same
precision.
asset, but one's USDT, one's USDC, and they
Yeah,
mix with one another.
that's just because I cannot add the same ticker in the same list twice. That's where I guess most people work with layouts and such, and where you see Sven has like 2,500 tabs in his TradingView. And for myself, I know that already from my Chrome browser that the tabs get so tiny. Eventually, I will spend most time searching for things than actually using them. So I organized it like this. What I don't like about it that you also have like price differences. So if I find something on a daily, it wouldn't necessarily match with the BitGet perp feed, which is the most accurate besides the Binance perpetual contract feed. So yeah, what am I gonna do?
That's great.
So yeah, could definitely improve here. That's also why when Big3 Small X was asking for a masterclass in TradingView, I don't feel at all comfortable to give a masterclass how to use this tool like top knowledge workflow. I'm better at charting the candles than actually using every piece of TradingView feature and then optimizing around this. But I take all the information from the community and already learned different things, such as even simple things like templates. Organizing with these things already improved my workflow time a lot. So if anybody has like better ideas how to organize it, feel free to speak up and actually make this more useful other than spamming everything with tabs, because I don't really like that. So yeah, for entries, I would go into the details of the Binance perp, because that's where I actually take my positions. The Sol USDC perpetual contract feed is also the one I hit long, exit, short, exit, whatever, hit the limit orders on. So if I want precision for my scalp or for my entry, then I would also need the information from this chart, because this daily hold 212.77. If I go here, it's probably not the same. Maybe it is now, but I'm brave enough to say it's not. Yeah, it's 3 cents off. Okay, fair enough. It's close, but it's not the same. If I go to this one. Yeah, then this is even like almost 20 cents off. So you obviously want to take the entries at your feet, especially when you're scalping 1 hour, 50-minute, 4 hour, whatever. Maybe it's not as much as important if you're taking weeklies, because if you have like a weekly engulfment, then price is more likely to go a bit further into the weekly, not immediately bouncing off it to the penny, like if you are scalping the 15-minute or 1 hour or 4 hour, if that makes sense to you.
Absolutely. Thank you.
So yeah, eventually we escape all this shit, or things get invalid here, and then I delete it and don't mind. Yeah, because it gets irrelevant when we go down here. I'm not saying we do, but if we go down here, then I just remove all this and then draw out the new range. If we remove to the top side, remove all this and draw out the new thing locally. Yeah, so coming back to the FIB basic principles of entry and exit. We talked about it like very early in the stream, or was it off stream right before it? But anyways, trades to not take are as much important to know as like trades that you want to take. So if I go here on the 7-day chart, technically you have a short here. You have a accumulation candle followed by a distribution candle that has a larger body size. So this creates a hold level and a short. As soon as price hits that price for entry, and then eventually it will hit that exit. But this is very dangerous. Even if it's a complete range, you technically, the chart would have your back of having 2 distribution candles, which makes it a more valid trade, not like single engulfments, which are more risky. But if you are trading against the overarching trend, which is like the same idea we've talked about earlier with hype, with that one long that was hit this entry, but the exit was behind the downtrend and behind the break level, which was more risky. This is like the same situation for the short, because you definitely have like a really strong uptrend here. And if you hit the entry here, now you're looking for an exit behind a like 4 months old uptrend on the 7-day chart specifically. So, I mean, price went much higher, and maybe you found a refined entry around 237, and now you're chilling because price saw almost $20 lower, and you couldn't care less for all the noise in between, and it may dip here, does a trend sweep, and so on. But from the moment of the trade creation and before all of this just happened the last days, because we are dumping just now, this is your situation. And if you then go into the daily, this is your trade, because you zoom in. The same as you have like a 4-hour trade, you can zoom there in the 50-minute. Now we have a 7-day trade. You can zoom in there on the daily or hourly or whatever, just to get a better picture. So this would be your entry coming off of that situation at that moment in time. We don't know yet that all this will print, because we are here on the 13th of September. And we want to make an informed decision if we want to take that short or not. Spoiler, I guess almost nobody did take that short. It was also talked about, and that was, yeah, a good and informed decision, because that exit sits behind a lot of strong uptrends. And that's where taking FIB trades blindly. If you don't know how to manage your position size or leverage very well, or you're like super scared and you cannot let things play out, like what price did go much higher, and yeah, eventually it comes here. Maybe it does it even in the next days. We cannot be perfectly sure that we are just reverting all the numbers shared in the chat. There are valid reasons to think things will go a bit lower, and then you would have had that exit after your entry. But at that moment in time where it's relevant to hit that entry, the odds are a lot against you that you will reach that exit in a timely fashion, even despite the fact that it may run against you much higher because of all the big air gap here. If you look at this, as at the moment, the entry hits, you have like a huge air gap of nothingness, So prices can easily travel this range up and down without any support or resistance really on shorter time frames, sure, but not on the relevant time frames like dailies and such. So even from a like very basic view, this would not be like a very good moment to short this because price has no issue of traveling the whole range of like $20 or $15 up and down. And you also have like the trend, the much larger, much bigger uptrend at play where your exit is behind. So that's again why I try to sharpen the awareness a bit more about, okay, you have that FIB entry and exit by a very high success rate of like 99%, and it will eventually play out. But it doesn't mean it plays out in timely fashion where you would be happy with of taking all of them every time, all the time, just because they are there. And that's where the exercising, the execution, the profit taking, partial profit taking, and so on will help you over time to get the confidence and the understanding, especially to know which ones to take and which one you would rather not take. But there's like nothing wrong of taking this short idea and have it in your mind because it's a lot of sale pressure. You still have this valid price movement that eventually you hit that entry and that exit. That when you find like the good reasons to short up here, that you then could not care less if the price goes quote unquote only to the trend line support because you know you actually have that larger short at play, but you cannot know right now if the chart will actually go there, you know, because you have that trend in your way. But if you short it here with them in your mind that that thing is technically active and at play, then could perfectly have shorted for many reasons here. It's like also shared in the chat the last days, why we're probably reverting. And then like at the trend, take a huge chunk out and then put that stop loss at the entry and then see if it actually completes a full trade, you know, because there's also like not a whole lot targeting lower. On a more nuanced thing there is. Can also show you that. Even on the 7-day alone, scarily, you have like a 2 versus 2 short. So that's where you get a bit more advanced, maybe. So there are like a lot of FIB trades just by single engulfment candles, like all the ones we talked about today. But even 2 versus 2. So, okay, let's start like here. You have like this, what we talked about today, 1 versus 1 candle. So one candle in one direction gets engulfed by candle in the other direction, like here or here. But you also have like so-called 2 versus 2. That's where 2 candles in the same direction get engulfed by 2 candles of the opposite direction. So as you can already see here, and this goes on and on. You also have like 3v3, 3v3, 4v4, etc. Technically, there's like no limit to this, and they are valid. But yeah, same reason to not trade this, like why you wouldn't have taken the other one also, you know. You would have actually fucked yourself over really bad if you would have taken this short down here, trying to short in 284. Now that it went up like $30 higher, because you're trading against the bigger uptrend that is at play and trying to hit that exit with force and like being stubborn just because you have those 4 candles. Yeah, that's that's not how it works. But how you draw those 2 versus 2s is like the same as you draw 1 versus 1. You take in a short situation, the upper wick, and then from the 2 candles, the first candle, lower body, because you can see that those 2 blue candles are in total engulfing these 2. So this creates also a normal hold level on itself. Doesn't help that much in this case because of the overall uptrend, as I said, but it will also eventually play out. Fingers crossed it does before we go much higher. I would feast on entries around 180s, 189 and so on. But I know a lot of people would not be super happy if we go that far down again. So let's see what happens. So yeah, same rule. And why is that? For understanding. So you maybe read it in chat already that any of us wrote like, yeah, time frames or time is fractal to each other. This basically means that when you have 2 consecutive candles in one direction and 2 consecutive candles in the other direction, this is basically nothing else but a 14-day time frame, because you have 7 day, 7 day, just 2 times. So that adds up to 14 days. And it wouldn't show up here. And that's the funny part. That's where the cool trades and sneaky trades come along. And why it doesn't show up here? That's because how the rollovers of candles work. The 14-day time frame and the 7-day time frame don't match where the candle opens and closes are. But nonetheless, is this like a 14-day time frame? And this is a 14-day time frame, and the FIB principle or FIB trade and the success rate about it has no other claim to those things happening other than that they will happen over time because of how the money flow in the same time period in the opposite direction created pressure in either or direction. So in other words, in a 2 times 7-day upwards movement, you have this upside pressure, which gets countered by 2 times 7-day downside pressure in an accelerated way, because you got the engulfment, and then this locks in, and this creates an so-called echo, which will eventually cause price to go into that 184 level that was drawn out here. And this is like for all the FIB trades. So, and to make it a bit easier, I even use this in chat for explanations sometimes when somebody asks. To make it probably a bit easier, please shoot if you are completely lost, and I'll happily explain it again. So if you were to crunch those candles just into one, then it probably makes a bit more sense now. I can make it even a bit fatter, that it's more obvious. Does it work like that? Yeah, kind of. So now you can see if you crunch 2 candles together in the same direction and then crunch 2 candles together in the other direction, then you can see it's basically one candle because it's one time frame engulfed by the same time frame just in the other direction. And now you can see here like, oh, okay, that's an engulfment, and eventually that will create that short. So maybe we have a more pregnant example of recent FIBs like that we are not playing on trades that we do not take. I mean, it's an important topic to be really aware of the trades you don't want to take. because it makes you as much money as knowing which trades to take actually, or it saves you as much money or nerves or panic, fears or whatever to avoid the bad ones, and just sit it out. Eventually price will go like on hype before, as I said. Eventually it will hit that 4-hour exit that it missed for the explained reasons, but maybe you don't want to actually sit in a long for that time. So if you don't have the time, the margin, the collateral, or the nerves or whatever to sit in this thing until it hits exit, then you actually want to learn the nuances, which trades are better to take and which ones are better to skip. So do we have like good 2 versus 2 example? Because they're hiding really well. Yeah, I guess this one is fine. Because those are both trades on their own, which is the funny part. If you take the, if it wasn't clear, if I'm talking about these 4 candles here, it's like 2 accumulation candles followed by 2 distribution candles. That's a 2 versus 2 engulfment on the 4-hour again, which is basically nothing else but 8 hours. If I go on to the 8-hour now, maybe we find it, but maybe we don't because of how the rollovers work. But this will probably show up. So let's go here. What was it? 15th of August. All the way 15th. There it is. So that's like self-explanatory. You have 1 8-hour candle engulfed by 1 8-hour candle, and this creates a short from here to here. Whoops. It's not the best arrow. So from like this to this, it hit the entry here, then went a bit higher, and eventually it hit that exit. But if the rollovers on the 4-hour and 8-hour wouldn't match here right now, then that's also like a valid trade on the 4-hour. If I move back to this one again, up 15th of August here. And the fun part is you often get like 1 or 2 or more trades out of those. If it's a 2 versus 2, it can create 2 trades. If it's a 3 versus 3, it can create only 1 trade, maybe 2, up to 3 trades. That's also where it gets really fun and also makes you better understand how the amount of sell pressure then comes in here, because you have 1 short on the 4-hour and you have another short on the 2 versus 2 4-hour, and probably more time frames, and eventually price is out of steam and then rolls over here and then dies. And the particular good example here is that this 4-hour short did already hit its entry by this candle before it dumped really hard. I mean, that's like the typical situation of, oh no, have I had held to my short longer? I would have made so much more money, and so on. But nonetheless, if you're scalping and eventually you're more emotionless, you took $1.50 price difference, roundabout $1.70, which is raw money. And if you shorted this from here to here, then this trade is already complete. And technically, those two candles alone are never relevant anymore for a short because they are done. Because they got created here, got activated here, and immediately followed through. And it's like probably a 15-minute, 30-minute trade. You are in, and then profit made, margin free again, move on. But the 2 versus 2 engulfment never hit its exit because that candle dumped so much further that this entry here was not hit, obviously, in all this range, and eventually when it travels back up, gets activated here and creates this exit on its own. So that's where it gets also super interesting to be aware of if you're scanning through the charts. Obviously, better start with 1 versus 1s. They're easier to understand, but if you feel comfortable of finding these also, then try it out or ask. And especially if you're not
Hey, Blue,
sure.
before you move on, can you do me a favor?
Sure.
Can you draw a trend line from that the top yellow candle?
This one?
And yeah, exactly. And then array it out as usual. Does it? Oh yeah, it doesn't touch. Okay, perfect. Right. So when that trend line was created, we had that also that confluence that you could. That's a great entry because as that trend line gets created, that creates a ton of resistance.
Yeah, that's like super awesome, right? It's like chart porn. If you have like this, I guess
Yeah.
you mean. Then you're
Yeah, like
like,
as price is coming up, when that trend moves, you get a lot of confidence that it's going to get resisted. Yeah.
yeah, especially after the
Yeah.
hold, right? Because you're very good point and thing you bring up there. That's always important to know your enemies or friends for entries. That's the situation when the candle closes, the hold is created, the trend moves, or as I prefer to do, add just another trend. And now you're having this, and when then price travels after that closure through that situation, that's what you're looking at, right? You have that downtrend, you have that hold level, and then whoop, can just check. Okay, it fucked over a bit more. That looks a bit like some US data got released at that moment. That's like a scam pump to take out all the stop losses, but nonetheless, price follows through, right? So, what time was that? Yeah, that's actually 14:13, which is my local time of actually being usually when like CPI data, PCE, that eerily scammy.
Oh yeah.
But also doesn't matter, right? You can perfectly see how it just scams everybody out of their stop losses above this wick, and then the algos follow through and then go through the rules of having that downtrend and that hold level, and and then eventually fucks over really bad. Yeah, and then you're probably already in your exit. So yeah, good point. So that's then basically also trading with the trend, if you were to long this, same bad situation like we explained on hype before, because it's your situation. Oops, where is it? Technically, you have an engulfment here, right? Distribution candle, followed by full body accumulation candle. That's a hold. That's a long. But while hitting the entry, you can see that wick never went to its exit. And that's again because you're trading against the local trend. And how to spot trends and direction is probably one of the hardest parts while the chart prints. I agree, and many people say that, and I still exercise on this. But I guess at that moment in time, it's also fair to say that you have a trend reversal because it dumped already super hard, gets a measly weak bounce. So longing this by intuition, by experience, by following the idea of trading with the trend. If you would have longed this just because you have an engulfment, yeah, you would learn pretty fast how you wouldn't really like to do that in the future, given you ignore the structure that you are navigating, trading against the trend with an exit far above all those resistances, if that makes sense. Yeah. Oh, this is also another beautiful example of trading FIBs on the front side of the back side. Probably heard it a lot. Can't talk about it enough, I guess. So this is your backside. That's your uptrend until it finished. Then while it prints, it's the front side of something else from much further to the left. But when it trend reverts, now this becomes a backside. You can trade that on the new front side. Even if it's not sharply down, you know, you don't always get this zigzag, zigzag, zigzag. You barely ever get it. But even just creating this, I don't know, down curving, slow dying down is technically still the front side of this backside here with tiny flip-flops in between. But either way, we have an engulfment here and a hold level. So this is a pending trade that when, let's say, we were here, when it started dying. So even if this is just a tiny scalp, and there are people I know who just want to take the entry, the exit, then they are done, and then they move on. But as you get a bit more advanced, you will probably start to use those situations from the whole market structure, like from the whole chart that eventually has printed. You will most likely learn then to use those signals and unused hold levels and break levels below, etc., to get more conviction to take those trades to the bank for larger positions or to hold them for longer, given that you understand better, how the whole chart structure is. Just saying. But it's also perfectly fine if you have like a reliable entry and exit and then are done and then you can look for something else. There's absolutely no shame about taking a lot of tiny profits and compound those compared to trying hit Lambo gains with every trade just to cut losses twice a day and then look at your portfolio being down 10%. So, cannot.
Yeah, great advice.
Yeah, I think so. I guess it's underrated how much small gains compound actually. And just to wrap it up, I mean, it just presents itself. It hit the entry almost to the penny. It eventually hit the exit, and then it went much higher. But if you were to scalp this, that's like the perfect source of finding trades that I have a very high likelihood of playing out if you find unused hold levels, and probably realize I'm mostly using the 4-hour at the moment. That's just for the purpose of explaining. I use all of these time frames to find trades and even more that I don't have locked in here because the bar is already super full. but yeah, we have already found like, I don't know, dozens of 4-hour trades and even live of things that played out. You can imagine how it compounds if you get a bit more used to it, and then you're cycling through the bar to find confidential trades you want to take. So yeah, I have a 12-hour staring at me right over here. So if it goes here, it's like an instant long. Yeah. Would even go beyond the levels I'm eyeing at 205, 208. Would be really cool to long for Solana, but if it goes to 203, that's even for a scalp alone. Yeah, $2.50 change. Go that with 100 SOL if you can afford it, and then that's money. Yeah. I talked my mouse a bit fuzzy here and rambled a lot. I tried to bring like the basic principles of the very basics of the FIP trades to the table again today, because I felt like we have more and more questions coming in the chat and also in private messages. And maybe we don't have enough content yet in the playlists or whatever to like really forge that knowledge. But like there's no shame in keep asking those questions. And now that I just spoke my mind as the best of my knowledge, yeah, I would just bounce it back to you guys if you have like from what I told today, like immediate questions that I'm not aware of, maybe. Things to repeat, also fine. I don't have an issue to repeat anything 100 times. And yeah, as long as people want to learn, then I gladly explain it. Yeah, period.
This session was awesome for me, Blue. A lot of these concepts I already knew, but somehow I feel like I have some cohesion today. Like I really like you laid things out so easy to understand. Just fantastic. Thank you. This was absolutely awesome. Yeah.
Yeah, appreciate the kind words. You're welcome. You had a spontaneous question yourself, Ian. Anyone have strong confidence we weren't going to go higher, for example, to when we were in the range above? Yeah, I chatted with Sin a bit about it, and is it hindsight or is it not hindsight? You can judge that yourself, but Fibonacci levels work in many ways. So there was high confidence of not going higher because of what we are looking at here. If you draw like Fibonacci retracements in a general market perspective, it's like nailing exits perfectly for the situation, and you will find those a lot if you draw them through charts. So this thing here is like the golden pocket. That's also where a lot of profit taking already will take place. And then yeah, the 0.786 level both ways is usually where you find a lot of, in this way, sell pressure, or then vice versa, buy pressure. So yeah, I mean, you also have all the resistance here to the left, so a lot of reasons to not go higher. But like on the way down, because that's the more interesting thing right now. Let's go to a like cleaner chart. Maybe this one. So, I mean, we shared it already in the chat many times. And the reason why I take this wick high is because that's the technical high, and this one here is just a sweep. That's also where like all the divergence is printed, and yeah, it's just like okay, let's get another pump to take all the stop losses. So that's, yeah, the technical high, if you ask me. So that's also why you draw it like this. And so now that you read it in chat, you have those hold levels, you have all those numbers floating around. How low will SOL go? There's like another huge reason why there will be a lot of buying pressure, not only the hold level, untested and unused, and maybe more lower time frames within, but you also have the golden pocket. And I know that like a lot of traders look at those things, and I mean, we can try to ignore what others do in their framework, but to be realistic, they also do a lot of algorithms, and also large money will do a lot of algorithms. So there will be buying pressure here, given the most simple drawn out Fibonacci retracements, golden pockets and such. So 230 was already a level mentioned a lot in chat. Then refined the 212 for already hold, and all this pocket here, that's why it's called like that. But then also the, again, inversely, the 0.786 Fibonacci level is very common for greedy entries if you maintain the structure we are talking about. And we are currently, obviously, we are trying to be more positive until things print that tell differently. There's no reason to be like bearish, high time frame bearish yet. So like a typical retracement is like, this is your correction, and you get the lower high, then you get your higher low anywhere here, and then you actually fly higher. I mean, you obviously have more swings in between, but the overall thing is like this. And doesn't really matter if it's here or here. That's only the difference in greed and then min-maxing your entry. The important part is maintaining the character of this whole swing, which is to find a higher low. And this is where those levels come at play. Here will a lot of buying pressure come in. Then there will be a lot of buying pressure. And then now we know the heat map is full of shit at 200. So give or take a sweep to here. Still a higher low if we go here. It's not super likely to tip this and then ignore billions of longs sitting exactly under the price and then just go higher. Can happen, but not super likely. What we don't want is like this, because then you get like a whole different story of change of character from the structure of higher time frame actually rolling over, making a final high, making a very deep correction, making a lower high, making a lower low, and then you will really start to look out for, okay, what is at play here? Let's check my monthly, let's check my 27-day chart or whatever, because the daily is dying. Yeah, we don't want that. Even we want the nice entries, we actually don't want the nice entries because the change of character implications wouldn't be super fun for quote unquote October.
Excellent. Excellent. Thank you.
Yeah, Cinch said I should trade with trend repeat 100 times. Yeah. Yeah. Knowing your trend is like probably the hardest part. Like every single time. Because okay, now on the 15-minute, I somewhat have a local uptrend. Yay! Am I trading with the trend or am I trading against the trend? It always depends on entry, exit, position sizing. How long do you aim for, sit in that trade? Obviously, it's a downtrend overall, but just because it's a downtrend doesn't mean you have all this nice upsides in between. So yeah, that's the hardest part. And I know a lot of people don't like shorting that much. First of all, it's counterintuitive because everybody wants naturally price to go up. And it's also actually smart because shorting is infinitely more risky. I guess I wrote that plenty of times in chat, that price can go up as much as it wants. There's no big deal in going up 130% from here if it wants to do it, but price can only go down 100% to zero. So if you're longing and not over leveraging, putting all your retired money into a 10x, then most of the time money flow, inflation, treasury buying, call it for whatever you want, will buy you out of your longs, and the chart has actually proven to do that. No matter whenever you entered any long ever, since even 2nd of February, or even during that time, you know what I mean, like any long in the last 10 months, despite the tiny range up here, is in profit right now if we were to say that nobody ever exited their longs, but any entry ever is basically in profit until you get the higher time frame rollover and go into the bear market. Then you probably don't want to sit in your longs anymore, but that's not what's happening right now. It's still a large uptrend, and longing is less stressful than shorting, because when those things get parabolic, like let's say like this, I don't think Solana will do this personally, but I don't know, shorting this, even with no leverage, you're dead. It's 300% up, now you're dead. But longing this anywhere doesn't really matter because price cannot go below zero. So not shorting if you don't know what you're doing, quote unquote, not to be mean, just to be, I don't know, just to make you aware that shorting is much harder than longing, really. Yeah, guys. Oh my God, it's already 2 hours again. Time flying by. Does anybody of you have any further questions? Otherwise, I would.
I have a question, if you don't mind. First of all, thank you for doing this. It's been super helpful. When we were looking at the golden ratio or the golden pocket, you're saying there's like confluent entries around 213 and then more greedy entries around 203. When dealing with things like that, how do you set up an accurate stop loss where you're not going to miss a greedier entry, but you're also not going to keep shooting yourself in the foot and having like a deeper correction eating away at your profits? Ultimately, what's the best way to set good stop losses?
Yeah, that's a science of its own. If you want me to be really honest, I barely use stop losses. I rather decide if I'm behind a trade or not anymore, and then exit it for the technical reasons I justify that decision. And stop losses, to be really relevant, would be like super far away. I guess Sindot also explained that plenty of times in either the educational videos or on stream also. If you have like a short, let's say you short it anyway here, and most people would, where's that shorting tool? see, I don't even use it. Where is it? Nope. Nope. Ah, there it is. Let's say you shorted anywhere here. Doesn't matter in detail right now. You entered a short, you had a reason. And then what a lot of people do is like, they put a stop loss like here. I don't know. And the issue with stop losses I also have, for me to them be really worth it, they should be close because I want to have like minimal risk and minimal losses in keyword if price doesn't do what I think it will do. But to make them technically viable, you would actually need to put it like up here or at least up here. And that's so much more technical room it gives me to make it a stop loss that there is no actual meaningful reason for me to use a stop loss in the meaning of actually executing it on my position in my account. But I have alerts, I have at best I have time because I'm on the charts anyways, and if I see that we are going to the levels where I deem, okay, now that short doesn't have a good confluence anymore as when I thought I entered it and it now got invalidated, then I probably give it a bit more wiggle room and then make the decision to exit it or not. That goes the same way for the longs. So I don't have a good answer to you to say if you enter long here, then put your stop loss there and there, because I would like preach what I don't do myself. But you can obviously find if you enter here. By the way, in the follow-up point to all of this is too tight stop losses within the range of price moving before actually rejecting for a short or bouncing off for a long is where like most sweeps and money probably goes into the dumpster fire of people having too tight stop losses, and the market just fishes them if they are like this tight. Then yeah, what are you expecting getting out of this, getting ahead, that you are not getting wigged out? So to be like technically relevant, you would want your stop loss to be on a 1-to-1 ratio on a large swing to take out these lows. But then to me personally, if you put a stop loss here from this entry, then why are you not starting with your initial limit order already here? So from my trading style and then how I navigate the charts, the stop losses that really make sense are at levels where then it gets questionable why you took the position in the first place, if that makes more sense to you. If not, please ask again or more.
No, that's great. Thank you.
Good example is Asta. I was in an Asta long. I cut the losses. Obviously, dumpster fire meanwhile. So why not take my pain to explain how I make my decisions? So that was the chart. I wasn't along. I had these trends here and they were building. And to me, we were like preparing to also approach like the downtrends to take them and the resistances. Obviously the chart didn't, but it's in hindsight easier to say than why that happens. So I would have wanted to find invalidations, and what then happened is that traveling through this trend here, if you can see this. I know it's a very congested chart. If you don't draw it out yourself, I will mark it. Click. So we have this range trend here, and eventually price fell into it and then traveled alongside it. And with this candle here and bouncing again on this trend, couldn't be sure if it's gonna take it or close back under it again. But as price were on a lower time frames approaching this particular trend, then here also, while dying on this trend and not upholding really on the break levels to the left and the support levels, that's when I invalidated my long manually, because I had enough confidence that this thing is not going to go back up anytime soon, because it's actually keep invalidating the bullish case, because if there was a bullish case to take, then it would have used at latest this point in time here, or better even here, to make a real bounce and build some support and move outside of this trend and not keep stuck under it, you know. But where do you put a stop loss at that situation? So that's why they don't work very, very well for me. I mean, I avoided the bullet of all the dumpster fire, but I manually made that decision, and I could, for myself, could not really come up with a good stop loss here while observing how the chart develops through this, because so many times you have it that it looks super bearish, but it then on a lower time frame things start to build supportive structure, confluential structure, and give very good confidence about then getting that bounce and then even adding here, you know, and then that would have been a good spot to add if that structure would have formed to bounce back up, but it didn't. So I pulled the plug, and then yeah, it dumped like half an hour later for, I don't know, 35 cents or so. So maybe that explains it a bit better why I don't like using stop losses that much, because if I have had one, maybe technically that one would have been below this wick here for many people, or this. And one, you've seen it plenty of times on the chart. Price does love to wick those and then flies, you know. So you don't want, I personally don't like the experience of getting wicked out and then price goes into the opposite direction. So that's why I rather be on top of the chart, have alerts, have manual stop losses and technical reasons to cut the loss and say, okay, trade is gone, got invalidated, it is what it is, and then move on. Yeah, you're welcome, Monty Trader. So what does BTC do? Does it hold the 50 EMA? Looks like it. Oops. Barely. Closed below. Revenge bounce a bit. Very convincing that so many people are already twittering, yeah, the low is in, up only from here. So probably lower prices to come. Yeah, thank you too, Auto. Happy that you guys like the stream and have all that appreciation. Makes me want to come back every week. So let me check the live stream questions again. Yeah, there was none. Yeah, feel free to shoot. As I said, I try to cover for today especially. I try to cover the real. Okay, what is a fib trade? How does the trade get created? And where's the entry? Where's the exit? How do they work? And even the advanced version is already to know at best every time, but let's say most of the time when to take them and when not. Oh, beautiful example, just printing on Bitcoin. If this 4 hour closes in 1 hour 47, anywhere above 121,157, then this is an engulfment. This is technically a long. Whoops, wrong fib template. But do you want to take it? Probably not. Only if you have like high conviction for other reasons. Yeah, that's trading again against the trend. You have the bigger 4 hour downtrend, and so your exit is in the realm of getting there. It would be close to this hold level here, activating this particular short. But if BTC already decides to die on the interior downtrend, which is this sneaky guy here. So this is the exterior. This is the biggest outer downtrend we have currently on Bitcoin. This is your interior. So that exit is already behind your downtrend and behind short entry. And so it's questionable if you would want to take it. Not a good setup because you're trading against the trend. You're trading into the idea of another hold level, which creates a short. So if anything, you don't take this long, but the probabilities of taking this short and come out ahead is actually pretty decent. So, and this trade already got created. So if the price any moment keeps pushing into the downtrend, into this entry, just about 122,000 roundabout, that's a valid short, and exiting at 121,350 would be your take profit. And then, as I explained today, find out the fine tuning about this. Are you gonna take profit partial TP on half the way down? If it goes back up, you can add it back. If it goes back down, partial TP. So, or if you're just gonna let it ride, full entry here, full exit here, or advanced. Because if you're like more bearish and think where there's much more downside to come, then you can take that entry, 50% TP here, and then see if price for whatever reason starts dying more, and then make another informed decision why you would take the rest of that short as profit then. So yeah, pretty good example. Would not long this unless I would dig a bit deeper and see why it could bounce here. For example, that EMA again. If I was to long this and see this. So yeah, 50 EMA on the 4 hours pretty strong. As you can see, it keeps bouncing off of it. Now first closure below, so it got a bit weaker. So if you're like super advanced and then have like better ideas of why this long has a good chance of playing out after it gets created, then maybe you come out ahead. But if you're starting out, just learning and trying to understand from more of the basic ideas, then this is a very pregnant example of something you would not long, but wait for the short, take that short, see what happens, and then go home with those profits. And you even have like more reasons to be more bearish here. Oh, that's a cool one. So that's a good example of like a refined entry of that 4-hour short. And this 1-hour short here. And if price travels up here and the 4-hour short from earlier is still at play, you could wait for that entry because it's aligning more with the bigger downtrend. So this has an even higher probability of just playing out from here to there. So many trades within trades. There's a 2 versus 2 short. You have 2 1-hour engulfments, 2-hour candle, 2 1-hour candles engulfed by 2 1-hour candles. So this is your hold. You have a complete range, which means price actually created that downside before it's creating that upside. So that's also a valid short from here to there. Whoop. And it's in alignment with the overall trend. Yep. Yeah, thanks. Glad that you like it. Lively or lively. Yeah, I know it's a lot of shit. The rules are pretty basic, probably pretty easy for most people to wrap their heads around pretty quick. But if you're then sitting on top of the chart, trying to draw it out, and then even harder, go into the account and execute it according to the rules, that's where like the challenge like stacks, because explaining it and thinking about it, processing what is explained today or multiple times is probably easier than going to the chart, drawing it out, and then actually taking action according to those rules and to those trading, to that framework, and then letting it run, because it can be scary if there's a pump. If there's a pump right now like this, in a 5-minute candle, and you have a limit order here, then the bullish brain takes over and says, oh god, shit, my short entry hit, but price keeps pushing dramatically over my entry and I have my exit all the way down here. Oh my god. That's where like learning, getting confidence, sizing down, better not use any leverage, or where if you do very small leverage, will help a lot to get so many more trades in that then play out, that make you not only money, but also give you the confidence of understanding what you're doing. So if you have like 10,000 in your account and you're putting a $20,000 short here, then I can understand why sweating starts immediately if price goes $500 higher. But if you have 10,000 in your account and you put a $1,000 or $2,000 short here, then maybe you're not not as much worried if it keeps traveling up before it then rolls over and goes to your exit. And then if you find all of these and understand it better and execute it on multiple assets, maybe eventually you have 100 scalps done, 100 times profits, and then one day you wake up and just do it. Yeah, the Zcash or Zcash thing, really wild. Could actually reject of that weekly break level after all, distributing here nicely. We'll see.
I had a LO on the top wick. Do you see how there's a break level on top, and then the third wick is yellow, and it's like one tick lower. I
This here?
so right on the wicks on top. Yeah,
Yeah.
I'm so mad about that. I had a limit order up there and it missed it.
Ah, shit. Yeah.
Yeah, would have been an easy steak dinner for my Thursday night meeting.
Yeah, scalping even this bullshit here can be also very profitable, right? Yeah. Yeah, I shorted here and then got wicked out here. I mean, it's okay because it kept going there, but in a moment of time, it's annoying. And it even starts to take that break level kind of as support, which is really funny. Until it does not, then goes down $100 in a few hours.
Yeah, exactly.
So yeah, there's a 50-minute offer here. Yeah, it keeps grinding up in that upsloping channel. So kind of losing steam, but also not. Yeah, bearish diversions on the 1 hour is not hard with this pumping. So yeah, I guess that 4-hour wick hit the trend line even. Kind of sure. Let's check. This is 75. 76. Yeah, so the prior closure actually hit that trend line. The current one not, because the RSI moved up a bit. Yeah, hard to short meaningfully like blue sky breakouts.
Yeah, fair.
Because a lot of people shorted this, right? And then it just goes $40-50 higher and wrecked all of those shorts actually. Check the heat map. It's a couple of millions going to the bank of the exchanges right here. So maybe this has a better chance of actually rejecting. Here's another weekly hold level to the left. Actually put my alerts there when price goes there, because this one never got activated. Could be very juicy to short this from 230 to 180, because it's in confluence with the weekly range trend that's coming all the way down here, or from down here all the way up here. So if you have like two strong levels like this, the hold level, the range trend, I will probably try to short this in here if it goes there.
What's the what's the level there? What's the value? I'll make a mark on my chart.
That's like 230. The range trend, yeah, you know how it is. It travels over time, but that's almost the same. It's between 230 and 233. Yeah, so the hold level is 229.79, and the range trend is around 233 at the moment.
Nice.
So if you were to refine that entry on the weekly hold, go over there. Maybe you find even a better entry. So this hold level already got consumed. I have a short here, but this wick already went in there and then immediately executed it. So you would probably that daily doesn't give you a lot. I'm never perfectly sure which one is then the right one. Should ask Sin about this if he isn't here. I feel like this is the right break level, but if I take the 2-day, then it is this again. So that's where I get a bit confused which one is the right one. But either way, if it goes a bit further, it's the lower one. Okay, thanks. So this is the break level, or even on the daily. So you have a weekly hold level and the daily break level or origin, and yeah, it's definitely worth the short if it goes here. Big if. So as like traditional charting suggests, is this like a bull pennant? Then you put this line here up there.
Right.
Or is it like distribution and then it fucks over really, like map? Given the weekly break level it's already struggling at, and almost all liquidity got grabbed, and the next level was it 233 or 250? I'm not sure anymore, but the heat map had like an air gap here. So that's why I also short 215, because that's where the last piece of liquidity was sitting. And this space here was pretty empty. So if they want to go here, they will most likely fuck around for a while. Then everybody tries to short the top. Oops, come on. I'm still painting. Back. Okay. Take it a bit down, fuck around. Then everybody shorts, all the liquidity piles in here. Ooh. And then it gets efficient to go higher, because then they can sweep this all and then they actually go here. Yeah, basically same idea like what they did here. I mean, super hindsight also, right? I'm not claiming I would have predicted this to happen exactly like that. I mean, I had a 100-day short here placed and it didn't hit, just like yours on that wick. Didn't get it.
So painful.
Yeah, most hated dumps, like most hated rallies. But the idea remains, they have this resistance here for whatever reasons left. Then let the price go. Then now it starts dumping. Everybody floods in the shorts. Liquidity piles in, gets more, and then they revert the price and grab all the money. So until people stop shorting, like dramatically. Only when they stop is also when the price really stops going. That was like when I was trading Vine. That's also a very good example, because I went through this live. Actually was trading. So when this pumped, I also, obviously started looking for shorts in this period here. And it kept like just pushing higher and higher. And you could see it on the heat map, how it kept printing a lot of liquidity everywhere. And only when it got super thin and people lost interest shorting, that's when then, and also longing, then they flip bullish. That's when then the price didn't care anymore to go higher. I mean, there will be shorts here that win. It's like always. You also will have longs here that simply win. There are simply traders or algos that get it right, and people that are winning in these extremes, but not the majority, and the exchanges made enough money already here and then all the way down here to do all this. So I guess when the hype fades away on ZEC or Zcash, and all the attention goes away, then that's probably also when it will stop pumping and people will stop shorting it in that amount. It doesn't need to go up much more. So this is a hold level here, not a good one, too long. You are trading with the trend, yeah, but that's where like it also starts to get bananas to try to long the top. Is technically a valid scalp, but just for the fucking sake of how overboard everything is here, can play out. Maybe it does, maybe it does not, but that's not really something I would long, because this is the front side also here. As I explained earlier, you have like, I mean, it's this back side already went above it, so you would have to go really far left to find the backside of this running piece of front side. But either or, it is some form of front side right here, and you're trading a one candle situation. So one up, one down, one up. And they are per definition on itself, this situation of 1-1-1 doesn't have a high likelihood to play out super nicely, and also you're trading the front side within the front side. So this is your front side, and whatever it does here, it's still the front side. So you are trading the front side in the front side, which is also not super very well advised. Can it play out anyways? Yeah, sure. But if we go back to this hype example, these are the things that you rather want to look out for, especially when you're just learning and then starting out. You want to have a backside that you can then trade on the front side here. And yeah, so these are the ideas and then rules around that framework, why despite it being super overboard and then super bananas to keep longing here, just by seeing that FIB trade, that engulfment and hold level, doesn't necessarily mean you want to take it.
Great advice. Thank you.
You're welcome. So now what if this was the top? Are we going to be mad 11?
Well, I was in this and then I got out of it too early because I'm mad already. This little range is well, I'm up like $20 or something on like 5 trades.
Yeah, cool. That's a stake. Rare
Something.
medium and
That's
Coke.
right. Yeah, in Mexico or Italy, I guess. Stake for that. Not in Switzerland.
Yeah, in Switzerland that's 20 euro just for the bathroom fee.
It's a Big Mac. Yeah, I got a Big Mac tonight. Yeah.
Big Mac. Yeah. Oh my god, I gotta say, I once ate the best kebab in Zurich when I was there. Best kebab of my life, but it was also like 18 Swiss francs. Yeah, the local currency. So that's super expensive.
It's so crazy.
Super good, yeah.
Yeah, it's so crazy. Yeah. Yeah, food here is just wild. If someone has to prepare it for you. Groceries aren't bad actually, but yeah, cooked food is incredible.
Yeah. All right, guys. If you want to know more about food tips and food prices, we'll probably do another stream. Not for the recording. So if there are no further questions about this, yeah, those basic FIB trades and all the things we talk about, or any other topic, just shoot right now. Other than that, I would wrap it up from here. And here or read about your things in chat. Feel free to reach out there. if anything comes across your mind. If you have questions, charts, whatever you want to share, you want to understand better what's going on your stuff and what's the meaning of life and everything, then feel free to reach out or use this fancy live stream questions forum within Discord. You can put a question there, bullet points, list of questions, doesn't matter, or put a chart in there or image that we can then pull up here and talk about. Yeah, just use it and post your stuff there. Then we'll happily address it.
Amazing. Thanks. Fantastic stream. Thank you.
Yeah, you're welcome. Thanks for hosting again today. And thanks for all the plenty joiners. I've just seen that the list actually went up a lot while we were starting out. So yeah, I'm looking forward to more. Always happy to see so many people participating and all the appreciation. Makes us want to go further, learn more ourselves and transfer all that knowledge. And yeah, retire on Asta. It's my last 2 cents. Other than that, yeah, appreciate you guys. Have a good one. And yeah, see you next time.
All right. Ciao, everyone.